Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold bugs, pay close attention to this data. Interest in gold and silver stocks has skyrocketed in the last 2 weeks and for a good reason. So, gold surged from its $1,470 price range during the peak of March meltdown over $1,750 this week. Gold is getting hot again. Stockbrokers that were all cannabis and blockchain oriented the last few years are now calling their clients in the next hot junior gold stock. So, get in before the exploration this spring and summer. Oh, please. And bankers are lining up the next big financings to fill their institutional clients with. Searches for gold stocks are sharply up, and the newsletter crowd will follow shortly. My red flags are going up. So, here's the red flags. In the long run, I'm very bullish on gold, but like all commodities, it's very cyclical. But, Marin, gold is money. Yes, true, but most junior exploration companies have no gold. And I have a very different take on what's going to happen, which I alerted subscribers to last week. So far, it's unfolding like what I thought it would, but from here on out, there are two scenarios that could happen over the coming weeks and months. In either unfolding scenario, we are prepared to act. So, times to make a decision are coming up. For those new to the program and those catching up, let's take a look at how gold does during bad market conditions. So this chart of the S&P 500's largest declines in the past 40 years, and it shows gold's performance in the same time frame. So you can see when S&P is down, gold is usually up. So first you'll see that the glaring decline in the price of gold in the early 80s. Gold had just come off of its best decade ever with a 2,300% increase. The cool-off period had to come, and that's definitely true, right? It's never just going to keep going up. Things have to settle down. But you'll notice that the length of the decline doesn't matter. Gold nearly inevitably rises, at least a little, whether the recession lasts a few months or a few years. Think of gold like earthquake insurance. Your city is destroyed, suddenly everyone you know wants earthquake insurance too. After such devastation, banks may require multi-dwelling buildings to have earthquake insurance as part of the mortgage. Right now, it's too late. Gold prices are too high and dropping. Stock prices are closing in fast. Gold is insurance that can give you insane protection on your portfolio once everything is broken. Thus far, it's working. So what are gold traders saying? Every week, the Commitment of Traders report comes out. It details what positions the large speculators and the commercial side are taking. It's another tool you can use to make your own bets in the sector. In the chart below, you'll see non-commercial long positions in gold. You'll notice that these traders are reducing their net longs in gold, which was a 10-year high recently. So, on the way down from the 10-year high in gold in long contracts, however, if found some support around the 5-year trend line, this indicates that traders aren't quite ready to let go of their safe haven long positions just yet. This is an important point for gold. We are watching this closely. Maybe we'll get another chance to add our gold stock holdings in the portfolio yet. And a lot of this does talk about, ETFs and the paper side. I'm obviously very bullish on the physical, but I do know a lot of you guys and gals, you traders do, because this channel is precious metals, but I know a lot of people do come in from all scenarios and from the ETF world as well. That's why, but when I'm talking about gold and silver, I'm talking about the physical metal usually, but they're essentially the same markets and they do perform essentially the same. So, in the next chart, let's look at the short positions in the large speculators. Large speculators' short positions in gold are at 5-year lows. Meanwhile, the price is at 5-year highs. Is there a rapid reversal coming? From a technical standpoint, a longer-term pattern is forming where gold may test the major resistance band around $1,750 and $1,800. So you can see from 2010 to 2021, you can see the handle, the recent support level, and the cup forming. A classic cup and handle formation could occur where gold pulls back to test the recent support level. I'm not a TA guru, but I do know the best in the business. I don't base any of my decisions on any one fact, which is why I pay attention to what the TA charts are saying. The key is this: gold can consolidate above the 1,000, or can gold consolidate above the 1,750 range level for a couple weeks? If so, will have created a new base. If not, the short crowd will be slamming the gold hard. But if gold continues to rally, there could be a higher support level formed, similar to what happened back in 2011 through 2013. How high gold will go is anyone's guess, but a pullback is expected at some point. We're closely watching this, as well as there's been some recent support lines forming. And this is the thing, is right now every gold's at $1,686, silver's at $15.19. And when it's down, like gold's down $30, a lot of very bearish articles come out and negativity comes out. But if gold was up $30 or, approaching the $1,700-$1,800 level, there would be so many bull articles and very positive people. It seems like people kind of go with what's happening right now and don't really have faith. It's based off of the day-to-day price, and that's not very good. You have to have faith regardless of what's happening, right? Gold approaching $17, we know the support, the resistance level has been in that $1,750 level for a while now, and it still is not much lower below that. So it's really nothing bad is really happening. So you can't lose faith off of the little things like that, or you will invest extremely poorly. So the line has been tested twice already, and is shaping up to get tested a third time. If this forming trend continues, the gold price will rise even further. If not, it may fall into the cup and handle formation shown earlier. In the next 90 days, I will be incredibly excited. It will be incredibly exciting and important to the price of gold. So what is GOFO rate? In simple terms, it's the rate brokers in London bullion market are willing to swap physical gold for US dollars at a future date. The future date is anywhere from 1 month to 1 year. The GOFO rate is used as a benchmark to determine whether the cost of carrying gold is negative, backwardation, or positive, Contango. This is an alternative measure to spread between gold futures contracts and the spot price. In Contango, there's a lack of liquidity in the gold bullion markets. This often leads to huge rally in physical gold prices due to arbitrage, and we've been at extreme Contango levels for the last 2 weeks. Unfortunately, the LBMA stopped publishing this data back in 2015, so instead we look at the implied gold release rates, which is the cost of storing gold in a bonded and secured vault. These vaults are same ones that are approved by the CME and the London Metals Exchange for storage of settlement and future contracts. As you can see in the chart below, gold lease rates are nearly all negative for maturities under 12 months. Here's what that means. These gold owners must pay out of pocket for the privilege of letting banks use their gold as collateral in order to lend money to other firms. This is comparable to an incident at a Danish bank where, for the first time in history, they issued covered bonds with a negative coupon. That means bank or bondholders had to pay interest to debtors for the privilege of lending them money. In fact, the short-term gold lease rates went below negative 5% at one point. The coronavirus made it impossible to deliver gold bullion between London and New York. There were two main factors. Commercial flights were canceled. This is how gold was typically transported. And two, the closing of Swiss refineries, which is in the 400-ounce gold bar traded in London markets, are recast into 100-ounce bars in order to meet specifications of the COMEX gold contracts. Mine shutdowns and offline gold production. Our current count indicates 338 mining operations have been shut down worldwide due to COVID-19. Wow, that's a lot. Ramping up production cannot happen overnight, and it takes as long as 21 days to resume full production. To date, 115 gold mines are still offline, down from 122 last week. Wow. So the chart below shows that 7 gold-producing mines will be back online this week. So April 1st through April 15th, it looks like only 7. At least 23 gold producers have suspended their 2020 guidance due to anticipated or actual disruptions to their mining projects. To date, 115 gold miners are still offline. Last year, those mines produced 12.6 million ounces of gold. So there's a lot happening. Bear in mind that while with these numbers are understate the true amount of gold production that's currently offline, only a fraction of those 6.8 million ounces is likely to remain in production deficit for 2020. We expect many of these mines to be back online before the second half of 2020, but without hiccups. Remember, Yugoslavian mines I mentioned last week. It's difficult to forecast how high gold production will deficit for each mine that comes back online. It can be anywhere from 50% as low as 1%. The implications will be different for each gold miner. Gold isn't rising because the mine shutdowns. Gold is rising because it's a proven safe haven in uncertain times. But don't get caught paying through the nose for for gold stocks. Many gold royalty companies and gold producers are trading at over 200% of their net value asset. Gold will do well, but don't overpay. And that's the same thing that goes with premiums, right? There's these premiums, $15 premiums on American Eagles online, where you can go to your local coin shop once it opens back up on May 1st, hopefully, and you can get them for, for extremely cheap. For $1 over spot, maybe even under spot, depending on your relationship with them. So you don't want to overpay, but it is key to keep in mind what's happening and how COVID-19 is disrupting the system. So anyways, I'm going to wrap this video up here. If you did enjoy this video, make sure to smash the like button. Also, make sure you subscribe because I post daily videos. Thanks for tuning in. This was Silver Slayer. I'll see you guys and gals soon. Peace.